Part 1. The Quiet Architect of Modern Wealth. There are names we recognize without ever fully understanding why. Names that linger in financial headlines, in retirement plans, in the quiet paperwork of our lives. Some of these names belong to empires built loudly, with force, spectacle, or scandal. But then, there are the others. Names that appear small, discreet, ordinary, almost unremarkable, until you realize that behind them rests trillions and the financial future of tens of millions of people. This is the story of one of those names, not a politician, not a celebrity, not a flashy Wall Street titan, but a man who, almost silently, reshaped the American financial system and built a company that today oversees more than $7 trillion in assets. A firm that touches nearly every corner of investing: retirement accounts, mutual funds, brokerage platforms, banking operations, financial advice, and wealth custodianship. The company is Charles Schwab, and the man behind it is also Charles Schwab. Yet, his journey was not built on legacy or generational influence. It was built on something much more quiet, much more personal. A disorder that made life, communication, and even education extraordinarily difficult. And somehow, that weakness became the foundation for one of the most powerful financial institutions in modern history. This is how Charles Schwab built the People's Brokerage. Through a childhood of silence, Charles Schwab was born in Sacramento, California in 1937 into a world where education was structured, rigid, and unforgiving. As a child, Schwab struggled intensely with reading. Words did not form smoothly, letters did not cooperate, sentences twisted, tangled, and collapsed before his eyes. Teachers labeled him slow, unmotivated, unfocused. But the problem was none of those things. Schwab was dyslexic. At the time, however, dyslexia had no widespread recognition. It carried no diagnosis. To be dyslexic was not to have a learning difference. It was to be wrong. He stayed quiet, watched others, learned differently. He listened, he observed, he analyzed patterns, while the world insisted something was missing in him. Schwab was developing one of the most valuable mental models in finance: the ability to understand how people think, not how they say they think. He would later say, "I compensated by asking people a lot of questions. I wanted to understand how things really worked." That tendency to question systems that others accepted as natural would become the foundation of his empire. The era of the financial gatekeepers. To understand the magnitude of what Schwab accomplished, we must step back into the world of finance before 1975, a world nearly unimaginable today. Investing was not open to everyone. It was not easy. It was not affordable. Buying a share of stock required going through a broker, a gatekeeper. These brokers did not simply execute trades. They controlled access. They set prices. They charged commissions that were not influenced by competition. In fact, commissions were fixed by law. If you were wealthy, this system served you. If you were not, it shut you out. The financial world was not designed for the everyday person. It was designed for institutions, corporations, and upper-class families with access to relationships and advice. The average American worker could not reasonably invest in the stock market. Retirement planning was limited. Wealth accumulation was a privilege. The stock market was not seen as a place to build a future. It was seen as a place to already have one. Yet, in this closed system, Charles Schwab saw something others did not. He saw that ordinary people wanted control of their own money. And he believed, against every established norm, that they deserved it. The birth of an idea. In the 1960s, Schwab graduated from Stanford University with an economics degree and later an MBA. The dyslexia never disappeared. He simply learned to navigate around it. He became very skilled at absorbing spoken knowledge, at breaking down financial logic, at hearing information rather than reading it. He entered finance not as a charismatic dealmaker, but as a persistent analyst of human behavior. And he noticed something strange. Investors often didn't want advice. They wanted access. They wanted the ability to buy and sell investments without being lectured to, without being pressured into products, without being condescended to by financial elites. The brokers of the era saw themselves as experts. Schwab saw them as barriers. He began to quietly build a small investment advisory newsletter in 1963, Investor's World. The newsletter was modest, but its message was not. It told ordinary Americans something radical, that they could participate in the stock market, that investing was not just for the rich, that financial independence was not reserved for the chosen few, but still, the system itself made participation nearly impossible. Until something happened, something that would change the financial world forever. May 1st, 1975, the day everything changed. It was called May Day on Wall Street. On that day, the United States government ended fixed brokerage commissions. Suddenly, brokerage firms could charge any commission level they chose. Competition was finally possible. Most Wall Street firms panicked. They feared profit collapse. They feared uncertainty. They feared losing their dominance. Charles Schwab did the opposite. He saw opportunity. While others clung to old models, Schwab moved instantly, positioning his company not as a traditional brokerage, but as a discount brokerage. No elite velvet ropes, no expensive unsolicited advice, no unnecessary obstacles, just simple, affordable access to the market. He cut commission fees drastically, he built a business around service, not persuasion, and he marketed to the people Wall Street ignored: teachers, mechanics, engineers, secretaries, nurses, self-employed workers, anyone who wanted control over their financial future. For the first time in U.S. history, the market opened to the middle class. Millions of people would remember the moment they made their first trade, and many of them made it through Charles Schwab. A new kind of financial firm, Schwab's company grew rapidly, but not loudly. It didn't rely on glamour or prestige or shining skyscraper offices. It relied on trust, something rare in the world of money. The company built a culture around transparency, a radical idea in an industry that thrived on secrecy. And Schwab himself? He wasn't a grand public figure. He wasn't theatrical. He was quiet. But his quietness contained direction, purpose, confidence. His dyslexia, once seen as a disadvantage, had shaped him into someone who could cut through noise and reduce complexity to its essence. He understood something fundamental. Money is emotional. People do not invest purely with logic. They invest with fear, hope, and dreams of security. And so, Schwab's company focused not on winning trades, but on empowering the investor. It was a subtle shift, but it was revolutionary. The system didn't like being challenged. Success, however, rarely goes unchallenged. The Wall Street establishment viewed Charles Schwab as an intruder, an outsider, a threat. Discount brokerage was dismissed as unsophisticated, low-class finance. Competitors mocked it. Executives predicted it would fail. Some firms attempted smear campaigns. Others tried to replicate his model but couldn't match his execution. Because Schwab's true advantage wasn't price, it was philosophy. He believed something Wall Street did not, that the average person, given the right tools, was capable of managing their own financial life. And if that were true, the old system was in danger. Very real danger. By the early 1980s, Schwab had opened dozens of branch offices across the United States. He embraced technology early, using computerized systems long before they became industry standard. He launched 24-hour telephone trading, and later, online trading. He modernized investing. He made it accessible, and quietly, steadily, almost invisibly, he changed the financial world. Part 2. The Rise of a Financial Revolution. The American financial landscape was changing, slowly at first, then rapidly, then all at once. The 1980s were a decade of acceleration, political, economic, technological. The United States was transforming into a nation of individual investors. The idea of personal wealth building was no longer a fantasy whispered by elites. It was becoming part of everyday conversation. But this transformation did not happen naturally. It happened because the gates had been opened. Charles Schwab had offered the key. Yet, unlocking a door is only the beginning. The more people stepped inside the world of investing, the more they realized how little they understood, how overwhelming markets could be, how intimidating the financial language was, how emotional decisions felt when actual money, their money, was at stake. Schwab recognized this emotional pressure. He understood it because he had lived his entire life navigating a world that was difficult to interpret. Just as dyslexia required new ways of processing symbols, investing required new ways of processing risk, uncertainty, and fear. So Schwab did not only give people access to the market, he built systems to help them navigate it. Technology as equalizer. While most brokerage firms resisted the arrival of computers, unsure of how they would affect their control, influence, and profit, Schwab moved in the opposite direction. He embraced technology early, not as an accessory, but as an identity. Computers, he believed, could eliminate friction. They could reduce cost. They could provide speed, clarity, and fairness. In 1982, Schwab introduced 24-hour telephone trading, allowing investors to place orders outside traditional trading hours, a nearly unheard-of feature at the time. The technology was innovative, but the meaning behind it was more powerful. Investors no longer had to operate on Wall Street's schedule. They could make decisions on their own time. 2 years later, in 1984, Schwab went further, launching the Schwab quote machine. It delivered real-time stock quotes directly to clients, bypassing brokers as the source of information. In a world where information was power, Schwab handed power to the public. This was more than convenience. It was quiet defiance. It challenged a century of exclusivity. Then, in 1996, as the internet entered American homes, Charles Schwab became one of the first major firms to launch fully online trading. Once again, the system was rewired. Trades that once required a phone call, an appointment, or a conversation with a gatekeeper could now be executed in seconds by anyone. A new type of investor emerged: the self-directed investor, the independent investor, the investor who did not wait for permission, and Schwab became their home. The philosophy of accessibility. To understand why Schwab grew into a $7 trillion powerhouse, one must understand its core philosophy. It was not a marketing slogan, not a brand message, but a deeply embedded operational belief. Finance should be transparent. Finance should be affordable. Finance should empower the individual. This belief drove decisions that Wall Street considered irrational. Schwab lowered fees when the industry raised them. Schwab invested in client service when competitors cut service staff. Schwab expanded educational resources when others focused on exclusivity. This was not charity. It was strategy. Trust is the most valuable currency in finance, and Schwab was accumulating it faster than competitors could understand. The more the public trusted Schwab, the more assets flowed through its doors. And assets, not headlines, not image, not swagger, are what determine power in the financial world. The Great Turning Point: IRAs and the Retirement Revolution. In 1974, the U.S. Congress had established the Individual Retirement Account, or IRA. But early adoption was slow. People did not yet think of retirement as something they could control themselves. They believed employers or pensions would manage it. But by the 1980s, the pension system was weakening. Corporations were shifting responsibility onto workers. The concept of personal retirement planning suddenly became urgent, and Charles Schwab was there, positioned perfectly. Individual retirement accounts were designed for individuals to make their own investment decisions, which meant IRAs required low trading costs, strong customer service, access to financial markets. This was the Schwab model. Millions of Americans opened their first investment accounts through Charles Schwab specifically for retirement. And as retirement accounts grew, so did Schwab's influence. By the end of the decade, Schwab was no longer just a brokerage firm. It was a national financial institution. Battle with the giants. But power invites challenges. As Schwab's influence expanded, traditional Wall Street firms grew uneasy. They saw assets shifting. They saw self-directed investors emerging. They saw trust migrating to Schwab. So they responded. Some lowered fees to compete. Others launched discount divisions of their own. A few attempted acquisitions, quiet attempts to bring Schwab under their control. One of the most significant came in the 1980s when Bank of America acquired Charles Schwab and Company. The deal appeared logical on paper, a major bank gaining a growing brokerage platform. But something was wrong. The cultures did not fit. The philosophies clashed. The soul of the company was at risk. Schwab did not want to become just another department inside a corporate machine. The clients did not trust the bank culture. The employees felt constrained. So Charles Schwab did something extraordinary. He bought his company back. With borrowed funds, strategic planning, and relentless focus, Schwab regained control of his firm, restoring independence and doubling down on its mission. Few founders ever reclaim what they once sold. Even fewer managed to restore it stronger than before. Schwab did both, and the message to Wall Street was unmistakable. This company was built for the people, not for the financial elite, not for corporate power, not for acquisition or control. It could not be absorbed. The custodian empire, a power model, almost invisible, but the most quietly powerful move was still ahead. While the public saw Schwab as a brokerage for individual investors, behind the scenes, the firm was building another empire, one with immense influence. Schwab became the custodian for independent financial advisors, meaning, when financial advisors help clients invest, the money often sits at Schwab. The accounts are held at Schwab. The trades run through Schwab. The reporting systems belong to Schwab. Schwab did not need to own all the advisors. It only needed to hold the assets. This is perhaps the most strategic shift in the firm's history, because custodianship is quiet power, durable power, power that does not depend on daily trading volume, power that remains even when markets fall. By the late 1990s, Schwab had become the backbone of thousands of advisory practices, managing trillions of dollars not by force, but by trust. And trust is far harder to compete against than price. The culture of quiet confidence. Charles Schwab rarely shouted. He rarely sought the spotlight. He did not cultivate a celebrity CEO image. Instead, he projected something far more rare, calm, even in crisis, even under attack, even when markets shook. He understood that investors, especially ordinary, everyday investors, take emotional cues from the voices they trust. If the leader is calm, the system feels stable. If the system feels stable, people stay. And when people stay, assets stay. And when assets stay, power grows. By the year 2000, Charles Schwab and Company had become one of the largest brokerage firms in America, a leading custodian for financial advisors, a major provider of retirement accounts, a pioneer in online trading, and it was still growing, quietly, relentlessly, strategically. The financial world was shifting, away from elite control and toward individual empowerment. But the greatest test of Schwab's philosophy was about to arrive. A storm that would challenge every assumption in financial markets. A storm that would shake the belief in endless growth. A storm that would expose who was built on trust and who was built on illusion. The world was heading toward the dot-com crash, and Schwab would emerge changed, but stronger. Part 3. The Trial by Fire. The late 1990s changed everything. Technology was advancing faster than society could comprehend. The internet promised reinvention. Entire industries believed themselves on the brink of becoming obsolete. And for investors, especially first-time investors, the excitement was overwhelming. New online brokerages appeared overnight. Day trading became a cultural phenomenon. College students traded stocks from their dorm rooms. Ordinary workers were convinced they had discovered a simple path to wealth. The stock market was no longer a distant, mysterious arena of the elite. It felt easy. But ease is often the first sign of danger. Charles Schwab understood what was coming. He had spent a lifetime learning how people react to money, how fear can distort judgment, and how euphoria can blind it completely. As the dot-com bubble swelled, Schwab watched his clients, millions of them, step into markets with growing confidence. Many were new, inexperienced, hopeful. He knew how markets behave when they are fed on hope. Hope is combustible, and soon it would ignite. The crash. In March of the year 2000, the illusion fractured. The Nasdaq Composite, the heart of the tech boom, began to fall. Not slowly, not gently, but violently. Billion-dollar companies collapsed to pennies. Fortunes built in months disappeared in days. Investors who believed themselves geniuses were humbled before they understood what had happened. And Schwab's clients, the everyday investors, were afraid. Trading volume changed overnight. Confidence evaporated. Advisors were overwhelmed with calls, questions, disbelief. This was the moment that could break a company. But Schwab did not panic. He did not hide. He did not assign blame. He did not lecture. He returned to the core of his philosophy. People do not need to be controlled. They need to be guided. So the company doubled its investment in customer support. It expanded investor education. It encouraged long-term planning rather than short-term speculation. This was not grandstanding. It was steady hands in a storm. And when the storm finally passed, something surprising emerged from the wreckage. People trusted Schwab more. Because trust is not built in easy times. It is built in crisis. The financial crisis of 2008, the second test. 8 years later, the world faced an even greater collapse. This time, it wasn't speculation or enthusiasm. It was structural. The housing market imploded. The banking system cracked. Lehman Brothers fell. Households lost homes, jobs, stability, faith in institutions. Fear returned, deeper than before. And again, the public watched the financial industry's reaction. Some institutions broke. Some hid their losses. Some pleaded for government rescue. Some disappeared entirely. But Schwab, built on a different foundation, survived. The company was not structured around complex derivatives or speculative leverage. It was structured around custodianship, individual investors, and transparency. Clients once again saw something familiar: calm, stability, access, guidance. While the giants of finance stumbled, Schwab grew. By 2012, as the global markets recovered, Charles Schwab and Company was not just one of the strongest financial institutions in America. It was one of the most trusted. And trust is the power that moves trillions. In the modern empire. Today, Charles Schwab Corporation oversees more than $7 trillion in assets. It serves individuals planning their retirements, families investing across generations, independent financial advisors managing clients, corporations offering employee retirement plans, institutions seeking custodial stability. yet its influence remains quiet. It does not dominate financial headlines. It does not rely on spectacle. It does not demand attention. Its power is structural. It is embedded in the financial lives of millions who may never think about it, yet depend on it every single day. This is not the power of celebrity, not the power of force, not the power of fear. This is the power of trust built slowly, of systems built deliberately, of access built for everyone. The man behind the name. Charles Schwab stepped down from day-to-day leadership over time, eventually passing operational control to a new generation of executives. But his presence did not disappear. He remained a guiding influence, the quiet architect behind the culture. He continued speaking about dyslexia, openly acknowledging the struggle that once defined his childhood. He explained that his success was not in spite of dyslexia, but partly because of it. Dyslexia forced him to see the world differently, to learn differently, to rely on clarity, simplicity, and asking questions rather than assuming answers. This shaped his company, because Schwab was not built on complexity. It was built on making the world of money legible to those who had been excluded. He once said, "I wanted to create a firm where clients could feel understood, even when the world of finance didn't always make sense." And he did. The legacy today, the Charles Schwab name appears on retirement accounts across suburban America, on investment portfolios quietly compounding over decades, on tools and systems used by independent advisors guiding families forward, on the financial foundation of people who may never speak his name aloud. This is not a legacy of noise. It is a legacy of architecture. One man who quietly changed the system, who created access where there was restriction, transparency where there was secrecy, confidence where there was confusion. His company helped transform investing from a privilege into a possibility, and that possibility became the financial future of millions. In the history of capitalism, power is often measured by visibility, the tallest towers, the loudest voices, the boldest declarations. But real power, the kind that endures, the kind that shapes lives quietly, often moves in silence. Charles Schwab did not build a monument. He built a doorway through which ordinary people could step into a future once reserved for the wealthy few. And behind that doorway stands one truth: wealth is not an inheritance of the elite. It is a discipline available to all who are given access and time. Charles Schwab did not just build a financial firm, he built a bridge, one that still carries millions across uncertainty toward possibility.